Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 6 minutes till 9 a.m. Eastern Time on Tuesday, October 14th. So looking back at yesterday's session, right, we had that capitulation, you know, potential on uh, Friday's session. I think Jack was showing that it come into some sequence as well. And then normal just profile theory, I said that normally you would just consolidate for 2 days in the lower one half to one third of that Friday's range. And so we got day one in yesterday. It was kind of right to the expected high move of the day overnight, and then it was really tight, right? The volatility, there was no volatility during the between the bells yesterday. It doesn't mean there won't be any today, but yesterday it was very mute, right? I think 200 and some points in the NQ and not much in the ES either. So as we look uh, at today, and we can also see that you were held down by that poor structure, which is perfectly normal. So again, normally the title of my video would be that you've got JP at 1220 uh, would be what I would say. And that is something to be aware of, right? You're going to have Jerome Powell on a hot mic starting at 12:20. Uh, he is going to be giving a moderated discussion, so questions could be anything, right? And audience questions expected; those could really be anything about the monetary policy. So uh, it doesn't even matter what the title is when it's an open discussion with audience questions, right? Anything's on the table. So you need to have something on, not that you really care what he says, you just want to know when he starts jabbering and when he stops jabbering, right? Those are the most important things that you can glean from that. So overnight session, right, engulfed yesterday's session completely, and we're kind of hovering right around the bottom of it at this point in time. Uh, and that's the same for both of the indexes. The NQ a little bit stronger than the ES, relatively speaking. And so the title of my video is we have a small iron condor, and you can see the footprints of it. After you look at this for a while, you can see. But today is Tuesday the 14th. So you got 6600 and 6605 are the lower edges, and 6685 and 6690 are the upper edges. I will say though, remember last week we had that iron condor, right? This is only about a quarter of that size that was on last week, right? It was over 20,000 on them last week. It's only around uh, probably 5,500 is all that someone actually has on this today. So it's not is significant. And then you can see for the week, right, you've got the 6,600 on there, and you can always just drag down to the bottom of the sheet, right, on any of these tabs and see, what the sum is on the options that I have displayed, which are just the near term options and the major expirations in the near term. That's basically all that's important. There's, you can't look out too far because it doesn't. The dealers don't have to hedge against anything that's out too far. So, anyways, my point being with this iron condor is it, you have to assume that it could be respected, but because it's so small, it could get run over. But right now, the overnight low is right around probably just slightly under the 6,600 as well. But we are back in range more than likely uh, above that. We closed we might be 10 points under it. I take that back, depending on what the offset is. So uh, see if we end up getting back into that range or not. And then as we look at the SPY, you can see that the SPY is currently trading right now 556 after closing at 663. So it's down um, about, you know, $6 because we're almost up to 567 right now. Uh, so we're right around this the lower put wall for the day, and you can see between 557 and 662, which is remember we closed yesterday at 663. Status quo, right? The Bulls and the Bears both think that, you know, we should be living a lot of the day between 661 and 664 today, and we'll see if that is. And while Powell's on the mic, you know, we could get a kiss of this 670, right? Or we could get, you know, back down to 654, 655. So that would be the buffering range that I would see. And just normal status quo would be 661 to 671. Looking at the Qs, and let's start off at the bottom of the sheet on this one. It's still 590 to 600. Right now we're trading basically just a smidgen under 595. So right in between those, and you can see there's, you know, lots of positions below that level going down to 580, 575, 570, and not as much going above 600, right? Because, you know, why would you have puts up there when we haven't really held that much above there? So one thing to note is this 600, right, is also supposed to be the put wall, meaning if you're above it, that should be the floor. Well, we're under it by $5. So this 600 is going to be a large gamma. It would be surprising for it not to trade at least once today. Uh, and then, but I would still cut it off around 599, 599 quarter on any swing up, and then just kind of sit on hands for a little while. But 600 would be more of a, you know, if the market makers can get it around 600 plus or minus just a little bit at the close, that's when they're going to make the most money for sure. So you have to be aware of that. It's a potential pen for today, right around that 600, and that would be right around probably 24,000. Let's call it 839 today. More than likely, I'll put out the numbers when we come out, but that would be your penning scenario is right around in there for later in today. And remember, there will be people that are just trading out of those positions. So if we, you know, hover around, and, you know, if you get that plus or minus $1, right, you're going to look at 24,800 up to 24,882 or somewhere around there, uh, to 8 to 923. I'm sorry. Let's do that one more time. So you're looking at about 800 to, yeah, 880. All right, so I think we beat up positioning. So the iron condor is marked, and again, we're probably just a smidgen under it or right around it. So when the bell opens up, see which side of this we're going to be on today. You got the green stripe down here, the red stripe here. Again, just preface that it is not uh, as large of a position. And one thing that I didn't mention in the overnight session, right? If we let's try to see the easiest way to see this. Let's go to the ES here. Sorry about this. All right, so in the overnight session, we have gap filled. Basically, we had that closing spike base uh, from 4:30 to 5 o'clock on Friday, right? But really, the market closed right around this 66.05 on the futures, right? That's what we come down and gap filled into that. So I don't know that we necessarily need to test any lower, right? There's still traders trapped in this. And remember, these were probably more than anything else margin calls that forced us down. As soon as the margin calls were over with on Friday, the if you go back and look, remember the Qs and the ETFs trade until 8 o'clock, although the futures close at 5, right? In those 3 hours, they drifted higher. after those margin calls, right? So there were buyers on that. So basically all you've done is come back down and gap filled on that. Let's look at the NQ. So very mechanical. The NQ did not quite make it, right? It got up to, you could almost draw a set of single prints uh, right here on this for the NASDAQ, right? And we could throw that out a few days so we can see it. But we basically come back into that fair value gap from that closing spike base on Friday on both of these indexes, right? And we also had some poor structure from Friday that was right there on the NQ. So I think there's probably a decent possibility. I'd say it's probably 60% that we don't need to test this spike base any lower than we have. It doesn't mean that we won't, but uh, there's no real reason auction wise to go any lower uh, than we have right now. Um, before we test. So this could be the like the lower end of the range for now, and these fair value gaps or these single prints above could be the upper end of the range for today's session. We'll see what Powell does. I think it'll be interesting to see if we get any whipsaw. I would say anything that is below uh, 24,580, let's call it. Uh, while he's on the mic, like any type of a force down watershed, if you get back above there, it should start heading back up uh, towards the upper end. And I would say the upper end would probably be the one that would really frustrate the most people, would be right around this 24,865. So it would just be a little bit above that 600 level. I hope this helps. You guys have a great day. We'll see what Jack's looking at next, and I'll talk to you tomorrow.